Hey everyone, it's Mark Ferguson with Invest for More, and welcome to another video on real estate investing. Today we're going to talk about hard money lenders. So I flip from 20 to 30 houses a year. We flipped 26 houses in 2017, 26 in 2018, and 23 in 2019. Now when we flip that many houses, we do finance them. So I use a mix of banks, private money, and hard money. So I have used 4 hard money lenders in the last 2 years or so. And I'm going to talk about those hard money lenders, how it went using each one, which one I thought was the best, and a little bit about hard money, about how hard money works as well. So I also have an article on this on investformore.com that goes into a lot of detail about hard money. I also have another video that goes into the details on how much hard money loans will cost you versus private money loans versus bank loans. So I will link to those below, but realize that hard money loans can be much more expensive than bank loans, but it can be tougher to find bank loans for house flips. And there's a lot of different things that go on with how financing works. But this one is primarily about hard money, how hard money works, and my experiences with the hard money lenders I used. All right, so I have flipped almost 200 houses now in my career. For a long time, we just had lines of credit with the banks before the housing crash. It was really easy. That all changed with financing rules. It became much more difficult after the housing crash to finance flips and short-term investments. So a lot of time we would use local banks who would give us loans on each house. That was great. The interest rates were lower, but they don't finance the repairs in most cases. They don't offer low down payments. We'd often put 25% down. So that means we're putting a lot of money into each house. And when you have up to 20 flips at once, that's a whole lot of cash you have involved in flips that we can't use on rentals or other investments. So I started using private money from other investors I know. Now, one thing to realize is when you research and start looking for hard money, a lot of hard money lenders will call themselves private money lenders. They're still hard money lenders. So my definition of a private money lender is someone you know, an individual, another investor, your dad, your aunt, a friend, a coworker, someone you know with money who is lending you that money. Not a company. I think of a hard money lender as a hard money lender, and how they work is they usually borrow money from someone else and lend it to an investor who flips houses or maybe buys rentals or even develops projects at a higher rate. So they are not a bank, they're not taking deposits, they're simply usually borrowing money, lending it to another investor at a higher rate. Sometimes they have their own money and will sell those loans as securities, so that can happen too. But what you see is hard money rates are higher because that's how they do things. So a hard money lender to me is one of those companies like Finance of America, Lima One, Lending Home, Patch of Land. There's all kinds of them. Vizio, there's so many different hard money lenders out there. That's what I think of. So I started using hard money lenders because their rates have gotten really cheap lately. So when I first started paying attention to hard money lenders, which was maybe 6, 7 years ago, the rates were around 12 for the cheapest hard money you could find. 12% on the money you borrowed, plus you had to pay points. So a point is like an origination fee. It's a percentage of the loan that sometimes you pay up front, sometimes you pay on the back end. But if you pay 2 points on a $100,000 loan, you're paying $2,000. So if you're getting a hard money loan a few years ago, you're paying 12% at a minimum and 2 to 4 points usually. Sometimes other lenders were charging 16% plus 4 points or more for hard money loans. It was really expensive. But things have gotten much cheaper now as we've had more competition come into the hard money sector. So now you will see rates from 8 to 10%, sometimes even lower than 8%, and you'll see points at 2% or less. So I have had some hard money loans where we did points 1.25, really low. So the hard money became cheaper than private money. So I thought, okay, I'm always looking for ways to save money, make more money. Let's try out some hard money loans. And that is why I tried out these lenders. So I'm going to go through each one, tell you how it went, and what I liked and did not like. There were some good and some very not so good experiences. All right, so I'm going to start with the worst first. Finance of America. So they have bugged me for a while to lend me money, and that's one thing. I do a lot of flips. I have a blog, I have a YouTube channel, I have Instagram, I have a lot of social outreach, and these lenders all knew that when they were loaning me money. They knew that I would say good things about them if they did good. They hopefully knew I would say bad things about them if they did not perform. So they had a lot of incentive to do good on my loans. So it was surprising at some of the things that happened. All right, so Finance of America, I don't know the exact rates and terms for all of these. In fact, I could not find Finance of America's rates and terms because I signed some DocuSign documents for those and I never got actual copies of them back when I was looking through my emails. But it was somewhere, I think it's just below 8%, right around 1 point or 1.25 points, really cheap money. The problem was I had applied with them, given them tons of paperwork. It took us weeks to get this application process done. Once we did all that, they said, okay, great, you're approved. We just need your $700 application fee. So they did not tell me up front there's a $700 application fee, which none of the other companies ever worked with charged. So that was the first thing. I'm like, oh, really? But I just went through all this work, so I guess I'll still do it, and you have really low rates, we'll try it. So I paid that, and I got approved in their system. Now, the other thing you'll notice is all the hard money lenders say they'll give you a line of credit. It's not a real line of credit, all right? It's a obligation limit. Basically, they're saying we'll give you a $2 million line of credit, that means they'll lend you up to $2 million on all of your properties. It's not like you can go to them tomorrow and say, hey, I want to take $200,000 out of my line of credit. It doesn't work that way. It's more like, hey, I want to buy this house. Oh, we need an appraisal, we need to underwrite it, we need to go through this whole process that we go through with any loan. So it's not a true line of credit. It's just kind of their limit for what they'll lend to you. And that can be frustrating with hard money lenders because they kind of pull all these word games, like they say they're private money, they say they have lines of credit, when it's really just not the case. So we got approved with Finance of America, had a property that we wanted to use with them. It was a wholesaler deal, so I was buying it from a wholesaler. I had 3 weeks to close, so I gave them the information, told them, hey, can we get this done? It's kind of tight. They're like, yep, no problem, we'll get it done. Let's order the appraisal right away. So we ordered the appraisal, which was $500 and some that I had to pay up front, and waited for the appraisal to be done. A week passed, another week passed, and I checked in, and it was right before Thanksgiving, so I knew there was going to be some time off for the holidays. I said, hey, are we still on track to close this next week? And they sent me an email, and I show you kind of exactly what they say in the emails in my article I wrote, so I'll link to that too. And they say, oh, it's in, we got some kind of approval, should be ready to go. Actually, I can tell you, I have it open right here. What did they tell me exactly? It was, final underwriting has been completed, and the loan has now moved to pre-closing audit, is what they said. To me, that sounds good, right? I think we're moving forward. So a couple days later, I still hadn't heard anything, and they send me another email saying, we are not clear to close. I'm still waiting on your appraisal report and your CPL, which I didn't know what a CPL was, but now I'm really worried. So I'm like, hey, we're closing this in like 2 or 3 days. What's going on? And they didn't respond. I sent that on a Friday after Thanksgiving. The next week, when we're supposed to close, they respond and say, Mo, we still don't have your appraisal back or any of these other docs. We can't close. I'm like, what are you talking about? We're supposed to close today. And they responded back and said, no, we're closing this in 2020, not 2019. So even though I had called them, talked to them on the phone, sent them the contracts, emailed them multiple times saying we're closing this next week, I had apparently written on one of the applications, we're closing in 2020. And so they were in no rush, weren't trying to get this completed on time. never double checked any of this. And I told them that, and they basically said, oh yeah, that's your mistake. You wrote that on the application. We can't do anything. So I'm like, well, when can we close? They literally couldn't tell me. They said, they don't know. Maybe when we get the appraisal, then we can have a better time frame of when it's gonna close. So I ended up using private money. I had a private money backup for this deal, which I was lucky, and I closed it with them. And I said, sorry, we can't close this on time. This won't work. And I never heard from Finance of America again. I told them what happened. I told them I was pretty disappointed that we didn't get this working, and they literally didn't respond. 3 months later, no response, nothing. Never heard of the appraisal came back in. I don't even know if the appraisal was done, even though I paid for it. And so that left a bad taste in my mouth with the Finance of America. So technically I tried to do a deal with them, paid them quite a bit of money, went through a ton of work to get everything approved, and then could not get the deal done. And I'm never going to try to do a deal with them, which is probably understandable to you. So that was Finance of America. Next one up is Lending One review. There's Lending One, Lending Home. They're kind of confusing. Lending One is who I use for this next hard money deal. Again, their rates were similar, somewhere around 8% and a point and a quarter, a point and a half in that range. Something else to realize is you've got your points, your interest rate. They'll probably charge you for an appraisal or a BPO. We'll talk about that soon. They'll probably have a processing fee, which is like $700. They might have more fees. So remember that whenever you're getting a hard money loan, ask for all the fees up front so you know exactly what they're charging you. When you're asking for draws, so with hard money, you might be able to finance 90% of the purchase price and 100% of the repairs, right? That's a pretty big advantage. Well, they don't just give you all that money in closing. They'll finance the 90% of the purchase price, you bring 10% down, and then as you complete work on the property, they'll pay you back through a draw process on the percentage of the work you've done. And they charge you to send inspectors out and to do those draws. So it's important too that you know how the draw fees work, what all these fees are, how the process works. And I always try to get it all in writing through email because they all want to talk to you on the phone. I want it in writing so I know exactly what the terms, rates, all that stuff will be, because honestly, I don't trust some of these guys over the phone. So that's my little tangent. But Lending One had bugged me as well to do some deals. And for some reason, I decided to do kind of two at once, which is not smart. Always start out with one. And what happened was I wanted to use Lending One because they said we don't need appraisals, right? When I'm flipping houses, sometimes we can't always get inside the house. Sometimes I don't have time to do an appraisal, and a BPO can be faster. A BPO is a broker price opinion completed by a real estate agent. And a lot of times they'll just do an exterior one. They can do it in a few days instead of a few weeks, like an appraiser does it. So got these deals under contract and actually had more time to close these than normal. And the lender from Lending One says, hey, let's just do appraisals. I'm like, really? You need to do appraisals? He's like, yeah, let's do appraisals. I'm like, oh. For some reason I agreed. I shouldn't have, but I said, okay. So again, I had to pay, for these appraisals, which are more expensive than BPOs, but they really wanted to do it. And we got those appraisals back. One came in at $279, and the house was probably worth $320. I think we sold it right around $320, $315. So because that appraisal came in so low, all of a sudden, they're not going to lend me as much money. They're not going to lend me 90% of the purchase price. I had to bring like $20,000 more in cash than I was expecting because that appraisal came in so low. We got the appraisal on the other property. It came in at $260, and that house we ended up selling for $300,000. So these were appraisals that were supposed to be done as after repaired value. That means the appraised value is supposed to be what it's worth once we fix it up. They came in, as you can see, 20% low, 15% low than actual market value. So I got into it with Lending One over these appraisals. They said they're great, they're fine. I showed them why they weren't great or fine. We tried to challenge them. The appraiser wouldn't challenge them. After some research, I found out the appraiser seemed to live in Utah and I'm in Colorado. He had one address in Colorado, but that was an actual UPS address, not even a real office. So I don't even know if he actually saw these properties or hired someone to do pictures for them, which I could see. But anyway, appraisals came in low. I was gonna have to bring tons more money because of that. I ended up doing one deal with them, and the other one, I either paid cash or did a private loan, can't remember, but it wasn't worth it to me. So that was a big problem. The next problem was when I was closing this deal, I was buying this from another wholesaler who's a big time wholesaler in Colorado. They do tons of deals. I've worked with them many times. I bought probably 10 to 15 houses from them. The lender for Lending One literally got in a shouting match with the wholesaler, screaming at them because the wholesaler wouldn't tell them how much the wholesaler bought the house for. So when you wholesale a property, the wholesaler buys it or assigns the contract for a certain price. They sell it to me, the investor, for a higher price, and that's how they make their money. Well, for some reason, Lending One had to know what the wholesaler paid for it. Why, I have no idea. It makes no difference to them. And they got in a shouting match. The wholesaler texts me and says, who is this clown of a lender you have? What is their deal? Why are they yelling at me? And that was not good. It almost cost me that deal. And I recently bought another house from this wholesaler, and the wholesaler's like, hey, you're not using that same lender again, are you? Because we're not going to do this deal if you are. And I'm like, nope, don't worry, I'm never using them again. And they're like, good, I hope they got fired. This is literally what the wholesaler told me. So yeah, that's something to consider. And one reason why I won't use Lending One again as well. So once the loan went through, it was okay. I mean, I didn't actually do a draw process with Lending One. I just paid for the repairs myself because it's cheaper that way and I have the money. I don't feel like paying for draw fees. But I can't tell you how that draw process went, unfortunately, to let you know on that side. So that's how Lending One went. Not so great. The next one we're talking about is Patch of Land, who's the first hard money lender I used. And I met them at a conference, and it turns out one of their reps actually went to the University of Colorado, where I went, actually graduated the same year I graduated, and lived in the dorm the same year I lived in the dorm, but we didn't know each other. It's a few hundred people in that dorm, but it's kind of interesting. So we started talking, we did a loan together with Patch of Land, and that went okay. There were no major problems. We did have to do a broker price opinion on that one too. It came in low, but we worked with the agent, got it raised up to enough where it didn't matter. And I did do the repair process with Patch of Land, where I put 10% down and financed 100% of the repairs. So the thing that bugged me about Patch of Land was as soon as I bought that house, so let's say I had a $200,000 loan plus $50,000 in repairs. That weren't the real numbers, but assume that. I pay interest on the entire $250,000 as soon as I buy that house. So even if I haven't made any repairs yet, even if I don't have that $50,000 in my pocket, I'm still paying interest on it the whole time. So that bugged me. The other lenders did not do that on their draw process. So things went okay. We did have to send an inspector out a couple times to see if the repairs were complete or not. And they're like, oh, you didn't do enough work. And like, yeah, we did. And we got that worked out, but it's still a little bit of a pain. So Patch of Land was okay. Nothing crazy bad. But I think it's kind of annoying they charge you the full interest rate on repair money, even when you don't have it. So that's my feedback on Patch of Land. Finally, Lending Home was the last one I did. So they have also been bugging me to do some loans with them. Again, rates right around 8, a little lower, 1.25 for points, pretty cheap. And I didn't have any problems with them. Now, it could just be a coincidence. It could just be how this property worked out. But I think they ended up doing a BPO on that one too. Did not have to do a full appraisal, which was very nice. That came in okay, where we thought the value should be after it was fixed up. The closing was pretty quick. Again, I didn't ask for a draw process, so I don't know how that would have gone. But the fees were what they said they would be. The points were what they said they would be. They didn't argue with the wholesaler who sold it to me wanting to know what they paid. There was no problem with messing dates up. Everything went smooth with Lending Home. So I plan to use them again. We'll see how it goes in the future. But for the 4 hard money lenders I've used up to this point, Lending Home has been the best. Again, could just be the circumstances, but as I said before, each of these lenders knew up front that I'd be probably talking about them, possibly referring people to them, possibly not referring people to them based on how well they did. So it was pretty disappointing to see the 2 lenders really mess things up under those circumstances, which makes me think it's hard to trust them under other investors' circumstances that might not be as important to their business. Patch of land was okay. Lending Home has been pretty good. So again, who knows? Lending Home could completely mess things up on the next one, but for right now, they're okay. So that's my take on hard money lenders who have been the best for me. There's other ones I haven't used, obviously. There's Lima One Capital, who I've actually hung out with those guys. They seem like really cool guys. I've just never used them personally. There's Vizio, which is a very big company who I've never used personally. So they could be great. Again, I thought these other companies would all be great beforehand, but obviously that didn't happen. So, but for the 4 I personally used, that's my take, my review. And I do have a page where you can get access to all of those. I'll link to as well. And for some of those, I do receive a referral fee completely up front on that. Some I don't. Just depends on their program, how they do things. And it has nothing to do with how I reviewed them, because some of the ones I made a really horrible review on, they have referral programs too. And some of the ones I made good reviews on, they don't. So, I have a list of those lenders and some other ones as well you can check out if you want. Again, I make no guarantees on how great they will be for you, but I can give you my experience and how it worked for me. All right, so that's all I've got for this video. Again, check out the other video I did that lists all the costs on hard money, private money, with an example of my own deal. I do an example of my own deal and all the fees that were involved, so that really can help you out there. And of course, my blog, investformore.com, has the articles that I will link to on as well, with tons of resources for lending and financing, as well as all kinds of other educational resources. And then I also have 8 books I've published on Amazon too that go over a lot of this as well, for flipping, rentals, being an agent, all kinds of great stuff there. And if you have any questions or comments, leave them below. We love the likes, love the subscriptions, so keep those coming, and we'll have many more videos coming up too.